Hello traders, you're welcome to this video. In this particular video, we are going to be talking about the Bollinger Bands. We're going to look at how the Bollinger Bands work and how you can use it to identify good trading opportunities. So basically, the Bollinger Bands are a versatile tool that can help you improve your trading strategy by identifying volatility. Spotting breakouts, and guiding your entry and exit points. So here's how you can use them effectively. First of all, let us add the Bollinger Bands to our chart, right? We're just going to use the default parameters. Just click on OK. Okay. Now the Bollinger Bands consist of three lines, as we can see displayed before us. We have the upper band, which is two standard deviations above the middle band. We have the middle band, which is a 20 period simple moving average by default. And we have the lower band, which is two standard deviations below the middle band. Now, these bands expand and contract based on market volatility, providing valuable insights for traders. Now, how do you read the upper and lower bands? Now, the upper band, as for the upper band, when the price touches or exceeds the upper band, it suggests the asset may be overbought. Like we can see in this scenario now, as the asset exceeded the upper band, when the price of the asset exceeded the upper band, it indicated an overbought situation. Now, traders often look for potential reversal or selling opportunities around this level. So, as this happened, we would have been looking for a sell. Perhaps we could have, this is the 1 hour time frame, right? So, perhaps as we saw the price beginning to drop down after it had pumped above the upper band, as we saw the price beginning to drop down, we could have just entered a sell, right? After entering a sell, then we could have set our stop loss right above the highest point that the price got to, right? And then our take profit can be at the middle band. Middle band can be where we can set our take profit. But note that we can also use other indicators for additional confirmation. We can also use other indicators for additional confirmation of our entries and exits. Now, as for the lower band, when the price touches or drops below the lower band, it suggests that the asset may be oversold. For example, we can see as price touched here, we can see that after it touched the lower band, it went up to the middle band. So if we had entered a buy somewhere around here, we could have set our stop loss below the lowest point the price got to, or we can use the previous movement of the Bollinger Band to determine our stop loss level, just setting our stop loss right below this. Okay, now take profit can be at the middle band. Okay, however, it's important not to trade solely based on touching the bands. Context is key, and that's where breakouts and trends come into play. Okay, now how do you spot breakouts? When you have a breakout above the upper band, like we see here, if the price breaks and closes above the upper band, as we can see here, the price broke above it, and it closed above the upper band with strong momentum. It indicates the beginning of a strong, it can actually indicate the beginning of uh, a strong uptrend. However, if you notice a sell candle right after the breakout, then you might want to watch out for what happens next, because the price might be reversing. Okay, so you have to pay attention to what is happening on the chart. You don't just jump into a buy right after the breakout, or jump into a sell immediately after the breakout. After the breakout, because the bullish momentum was strong, you might want to enter a sell right after you notice the price beginning to reverse, because it is likely that the price will want to fill in the price will want to filling that space that has been created, and most likely the price will come back to retest the middle Bollinger Band. So a sell opportunity is going to be good after price breaks out in the upward direction and has gone significantly far. However, in some cases, after a bullish breakout happens, and if the next candles look bullish, perhaps after the price goes up and then you see a long wick coming down, and then probably the next candle becomes bullish and again maybe getting up to this point, then it may be a buy signal. Okay, but now let's just continue. If we find good examples, we're going to look at them. Now, if there is a breakout below the lower band, we can see here there was a breakout below the lower band. If the price breaks and closes below the lower band with momentum, like we can see now in this situation, the price broke below and there was bearish momentum. The next candle was still bearish, unlike what happened here. Right? So in this situation, as the price broke below it and the next candle was bearish, we could have considered entering a sell right after the bearish candle was forming. We could have considered entering a sell, and then our stop loss in this case is going to be above the swing high, the nearest swing high, and our take profit can be at the nearest support level, because in this case the lower Bollinger Band has been broken through already, so we can't use the lower Bollinger Band as take profit. So we have to look for the nearest support zone for our take profit, or you can consider using other indicators for extra confirmation. Okay, now you can also decide to adjust your settings of your Bollinger Bands for different market conditions. For example, you can consider tightening the bands for short-term trading. Like if you're a short-term trader, maybe you trade on the 5 minutes, 15 minutes time frames, or maybe if you are a scalper or a day trader, you might want to reduce the period of the Bollinger Bands to 10. And let us check that out, right? The period, you might want to reduce it to 10. You're going to see the difference now. You can see. So this is for short-term trading, so that you can be able to catch moves faster as a scalper or a day trader. You might want to reduce the period to 10. You can see that the Bollinger Bands are quite reacting faster compared to the period 20. Okay. Now, and you might want to keep the standard deviation. Let's go back to the parameters. You might want to keep the standard deviation to 2, or you might want to lower it slightly to 1.5, or also you might want to lower it to 1.5, which will make the bands more responsive to quick price changes, helping you catch intraday moves. Right, you can see that it shrank a bit after reducing to 1.5. This is going to help you to catch price movements even faster. Now, as for longer term trading, if you are a swing trader, you might want to consider keeping the default 20. Okay, you might want to keep the default 20 period, or you might even increase it to 30, right? And because this is going to help smooth out, you can leave this deviation at 2. This is going to help smooth out the bands, making them more useful for capturing large price swings and trends. So now you can see how the Bollinger Bands widen. Now you might also want to go to higher time frames like the 1 hour or the 4 hours as a swing trader. You might want to trade on the 4 hours or even the daily time frame, depending on your patience and tolerance for holding trades for long, right? So using the settings, you can see that when the price broke above the upper band and it continued being bullish, we can enter a buy right after this, because this is an indication that the bullish momentum was strong, and the stop loss can be set right below this. And then as for take profit, we can look for the nearest resistance level. If there is no resistance level to be found, then we can just wait for a consolidation like this. We can see that right after the upper band was broken, the upper band was also moving upwards together with the price, right? So we cannot exactly use the upper band again for a take profit. Instead, we have to look for price action. We have to look for consolidation or any pattern at all that shows that a reversal is about to happen, and then we can use that as our exit signal, or we can decide to use other indicators for confirmations of our exit. Okay, now why using the Bollinger Bands are useful on their own is important. Yeah, it's important for extra confirmations that you combine it with other indicators, right? Such as the RSI or the MACD. For example, if the price touches the lower band and the RSI, let's just add on the RSI to our chart. You just add it on to our charts, right? Okay, so now this is the RSI. So now example, if the price touches the lower band, right? Like example is around here, and RSI shows oversold conditions. Okay, this is not exactly showing oversold conditions. So let's look for another example. Okay, so as the price touches the lower band and RSI shows oversold conditions, it strengthens the signal. Yeah, this is just like an extra confirmation. It's a confirmation of the strength of the buy signal. So we can consider entering a buy trade right about here after the RSI confirmed it in the oversold region, right? RSI was pointing upwards, so we could have entered a buy, set stop loss below the swing low, and take profit can be at. We can decide to use the Bollinger Bands for take profit determination, or even the RSI. So we can decide to use the upper band because of how strong the buy signal is. We can decide to use the upper band this time around, not the lower band again, not the middle band. I mean, you can decide to use the middle band as a take profit level, or you can use a higher take profit level of the upper band. And we can see that when price got to the upper band, it was about the same time that the RSI entered overbought territory. Okay, so we would have used this as a confirmation of exit signal in addition to the price getting to the upper band of the Bollinger Bands, right? So we would have exited our buy trade right around there, and that would have given us somewhere around 500 pips, about 520 pips. Okay, now, by understanding how to read the bands, the spots, how to spot breakouts and track your settings, you can incorporate Bollinger Bands into your trading strategy for more effective trades. So I hope you found this video insightful. Kindly like, subscribe, and hit the notification bell so you can get updated on further videos for more trading insights. Cheers, guys, and happy trading.